What's up guys, Steven Dux here. Today we're going to talk about a couple of the plays that happened this week. The market started getting very hot, and we got pretty much a play every single day. We're going to talk about a couple tickers and in today's recap, generally including all types of strategies, and hopefully you guys enjoyed it. OTOK, this is a decent bounce short, but it wasn't a very good bounce short since the neutralized area is around 2.08. So when you are seeing there's a heavy resistance and there's no volume trading across the board until Friday, then you'll realize $2 area is very close to $3 area. So the maximum spiking percentage is around 30% to 40%. And the stock, I think, is started spiking at 1.91. So overall spiked about 40%, I think just a little bit above 40%. So that doesn't really meet the criteria of bounce short. Bounce short needs at least 50% for the bounce short to be able to work. And if it doesn't really meet the criteria or barely meet the criteria, the risk reward will get very strange. So if you take a look of this parabolic short and short into resistance, and you can see the stock came back from 2.41, then never cracked 2.40, 2.36-ish. And at the end of the day, it actually squeezed. So if you're really shorted, let's say momentum breakdown around 2.7, 2.65, then if you want to cover end of the day, you make nothing because the risk reward is not there. So just be careful when you're using bounce short strategies. Always make sure the stock spikes enough, has good risk reward, and trading solid amount of volume. If the stock doesn't really trade solid amount of volume, let's say trade only 1 million volume, then the stock becomes not tradable. If you're trading too much volume, let's say the stock traded about 70 million volume intraday, and then if you take a look at the resistance, then the stock doesn't really have enough resistance to hold, let's say, 70 million volume on intraday. So if the volume too much, make sure cut your losses quickly. If the volume is too low, you cannot trade because you will affect the volatility and you won't be able to get a very good executions that well. So IMRN is also a gap up short. If you take a look at 2-year chart, no resistance whatsoever, except this one line resistance that doesn't really count. Wait until the stock forms a correction. Make sure the stock loses momentum, then go ahead and short it. So let's say the correct level, say shorting point is around this 657 failed perk. Sometimes if the stock's on low flow, it can spike about 20% to 30%, sometimes even 100%. So within this half an hour, try to not place any trades until the stock starts to lose its momentum. What do I mean by lose momentum? It needs to crack at least 50% for the stock to completely lose momentum. Then you can start getting some the risk reward over there. If the stock, even though sometimes it loses 50% of its own gain, so let's say 739 going back to 521, if it's trading like this amount of volume, let's say trading around 30 million, 40 million at 12.45, then you will trade about 60 million overall. So where are those 20 million, 30 million shares are gonna go? It's going to trade, and if the stock is on low flow, it will cause a high demand, a low supply, stock goes up. You will play those type of weird actions that stock can read, break this morning high, and squeezing after hour. So always be careful with those gap up short. I wouldn't be suggesting trading these as a beginner. Highly suggest avoiding this type of play. Without resistance, don't try to guess. Wait until the stock forms a correction. Make sure it loses momentum or starts spiking. The key is don't trade the first 20 minutes until the stock makes its decisions. Now, the last ticker I'm not going to talk about is MTP. This one was also a very crowded trade. If the pre-market volume traded too much, let's say over 4 million, 5 million, the stock becomes not tradable at all. If it does have resistance, depends on how heavy the resistance is. If the stock does not have heavy enough resistance, the stock tends to break of its own resistance if it's trading too much volume in the pre-market. And when you're looking at 4 million, 5 million volume, 6 million volume in the pre-market, don't try to trade those type of ticker. I sized in small, I into this perk, I shorted a little bit in the chat room in the live trade and covered in the 1.80-ish. So made 13,000, I think. I made about 18,000. Into those type of play, always sizing very small, and it's not some type of super good risk reward. If the stock loses its momentum at the first couple candles, you don't got that much risk reward. So always sizing small. If you have resistance, that's better. You can size a little bit more. If it doesn't have resistance, make sure sizing small. And since you don't have that much risk reward, so make sure cover into the weakness along the way, into the close. Don't hold everything at the close because that's one of the pressure risk as well. Now let's talk about CEI. CEI is one of the very low flow that happened last week as I talked about it. This one doesn't really have a consolidating resistance. So if the stock returns to spike again, $5 will be not that heavy resistance. It has one little bit consolidating resistance around $4-ish. And until Friday spike, especially into this day, when the stock tends to spike and doesn't really meet the criteria, it doesn't really spike to resistance, don't try to short into this type of play or you will become a potential long. So if the stock's on SSR and it's too far from resistance and it's gaining volume and it's a micro flow, then you will become a potential long. It will squeeze people because if the stock does not have heavy enough resistance on micro flow, the stock tends to spike, especially on SSR. And if you are very far from the resistance, let's say the resistance is around $5 to $6, then the stock's at 2. You will have another $4 to spike. So at this point, if the stock is gaining volume, don't try to think about shorting. Try to think about going long. And make sure you have a decent risk. Because on this type of play, especially on SSR, the stock tends to drop 50% in one candle out of nowhere. So also include a very, very high risk. And let's say if you bought at 2.48, risking 2.38, yeah, that's a really good risk reward. So the risk is for you to control. And sometimes the stock doesn't really have a high risk. It depends on how you control the risk. So this is, when you want to master penny stocks, master how to control your risk first before you go into any patterns, tracking statistics. That's the number one step because that's where you can achieve consistent profitable very, very quickly. After that, go into a strategy, increase your winning percentage, then go into specific details to increase your maximum risk reward. That's the 3 steps you need to take for you to become a very good, consistent, profitable trader. Hopefully this video helps. There's a conference coming up very soon. It's around August 17th, 18th, and 19th. It's gonna be a month away. So if you wanna come to watch me live trade, register at the link below. I will put it in the bio and I will see you guys next video.